185 new state laws are in effect as of this week, and this year, only one of them deals with homeowners insurance. Like the last 2 years worth of laws, this one is meant to grow the market for coverage and avoid financial catastrophe, but it does nothing to lower premiums that are increasingly unaffordable to too many people. Specifically, this new law allows surplus lines carriers, companies that cover what others don't, to take policies out of the state's Citizens Property Insurance Corporation, properties that are not primary homes like vacation or investment homes. But here is what surplus line carriers are not.
Who are not regulated by the Office of Insurance Regulation, who do not have to seek approval for rate increases, and do not have to seek approval for the forms that consumers are going to rely on in their biggest time of need after a catastrophic loss.
State Representative Hillary Gesell, Democrat from Dania Beach, and one of the most well-versed Florida lawmakers on the complicated workings of the insurance world, right here with me. And I know even your colleagues on the other side of the aisle agree that you know stuff about this very complicated issue. Hello and thank you.
Hi, thank you for having me.
So this was kind of a bipartisan passed bill at the end, but it wasn't always like that until kind of you got involved. Well, what changed and why?
So for me, my primary issue when the bill first presented itself on the floor, and again, I'm not anywhere near any banking and insurance committees, so the first opportunity I have as an insurance expert to hear these bills is for the first time on the floor of the House. And in its original format, it basically would have prevented, although the purpose was for secondary homes and for maybe people who don't reside in Florida to be taken out by these surplus lines, there actually was some language in there that it would have enveloped Floridians who maybe spend 6 months out of the year here in Florida.
Who are residents.
Who are residents.
And pay taxes.
And pay taxes. And that was really my primary objection to the language as it was written in its original form. We sent it back over to the Senate. We're successful in getting it amended over in the Senate. So when it came back to the floor for the House, we had a different vote than the first time around.
So this affects about 75,000 property owners. I think I read in some data set somewhere that's accurate. And it's Florida people here who are suffering among us. I mean, this is one of the biggest issues that we talk about here of interest to our viewers. And it's meant to depopulate Citizens because Citizens is too overloaded it's got too much to bear. And it probably will do that. But these surplus lines companies are really problematic to a lot of people in the industry that will be depopulating. Tell me why.
So surplus lines carriers, unlike the carriers that we have in Florida, which are domestic corporations, these companies are located outside of the state.
All of them?
Primarily, that's what what a surplus line carrier is. You can be in Florida writing on a surplus paper, but that gets us a little bit more complicated. But the primary thought process of a surplus carrier is they're located out of the state of Florida, and they are able to write policies in the state, but they don't have to get the same level of approval that one does with the Office of Insurance Regulation.
So is it too far gone to call them unregulated?
It's a little too far gone to call them unregulated, but they do not have the same oversight that our Florida companies do. But the caveat to that is surplus lines carriers are often your larger corporations. They are usually backed by the big names that you think of when you think about insurance companies versus what we have operating in Florida in our domestic market are the smaller companies that rely on that reinsurance market.
So I guess that begs the question, as people are taken out of Citizens, and not by their own choice, and we can discuss those parameters, but that kind of begs the question, how are you sure that these companies will be there if and when they're needed?
So what's really interesting about this particular bill that passed is we are requiring these carriers, if they want to participate in this opt-out program to depopulate Citizens, that they carry an A from AM Best. AM Best is one of the national independent rating companies that determine the solvency of a corporation.
So that's a good thing.
That's a huge thing. I wish we applied that to our domestic market. One of the problems that we face here in Florida with our small domestic carriers is they're not rated by these independent companies. And myself and Spencer Roach, Representative Roach, actually filed another bill last year that would have required an additional independent rating agency other than what we currently have in Florida, so consumers actually have knowledge about whether or not the company they're going with is financially solvent. And by requiring it of the surplus lines, we're actually requiring more of a financial understanding than we are in the other companies that are kind of coming into the state of Florida right now and doing the takeout Citizens.
And that bill went where?
Which bill?
The bill that would have made that same requirement for the
Nowhere.
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 So there are smaller companies depopulating Citizens who might not be around when they're needed.
Correct, that they don't have the same level of rating that we require from our larger independent companies.
And lawmakers must have looked at that and must have been worried, concerned.
It's actually one of the things when you talk about one of the biggest fixes that we need for our marketplace is having more agencies rate our companies so consumers have a better understanding of how solvent these companies really are. When they're rated by an individual rating agency that's not independent, that doesn't have the same background of like an AM Best, you're actually not getting enough information about the solvency of a company that could be writing your homeowner's policy and could go under if things, we get that big storm everyone talks about.
I'm listening to you say this so calmly. That's a bombshell to me when, I talk to my homeowners here. Let's talk about the depopulation rule. And this is for across the board that a company can come in and take a Citizens policy as long as their premium is 20% increase or less. I mean, 20% increase is huge to people, but that's the rule. And so we have gotten calls, we have gotten the paperwork from viewers who say, here's my increase, this is untenable, and it's 19.5%. So the companies know how much they can hedge. Talk about that a little bit, and is that working like you all wanted it to work?
Well, what I think it does is it allows, to some extent the legislature to pat themselves on the back to say, look, we're making all of our efforts to depopulate Citizens, but at what cost to consumers? You get that 20%, but that 20% rate increase is only for the first year. There's nothing in law, and this was one of the objections that I had to this particular passage is what happens the following year. If that rate increases and goes above that 20%, what's actually going to happen? These people are going to go back to Citizens. So we're really kind of just kicking the can down the road a little bit further because when they go to price it, they're not going to stay with that surplus lines carrier that might be 30, 40, 50%. They're going to go back into a Citizens policy. And what have we really done other than kick the can?
Repopulated, depopulated, repopulated. We're going to talk a little bit more about Citizens and the population of Citizens and the rate hike that Citizens has requested when we come right back. We are back with State Representative Hillary Cassell, Dania Beach, but for our purposes today, the insurance expert in the Florida legislature, about this new law meant to depopulate Citizens, one of many that have come down the pike. And Citizens was depopulating over the past couple of years because of the slate of new laws that have occurred in insurance. And now it's back up to the last data I saw was 1.2 million policyholders here, most of them in South Florida in Citizens. And so now this new law meant to depopulate it back to about half of that. Will it work?
So I don't think this bill is going to have the impact to depopulate it that significantly, right? We're talking about secondary homes, non-homesteaded properties. These are people who, based on the changes, will likely not be Florida residents.
You just reminded me of the math that we were doing before. I'm not good at math, so bear with me. So 75,000 policies are affected by this new law. Citizens wants to depopulate 500,000.
Right.
That math does not add up.
It doesn't add up, but you also look at it, incorporated into the same policy a specific provision that's going to go increase because we've increased the range from $700,000 to $1 million to allow more people the option of getting onto Citizens that are having a difficult time in that price range to be able to get access to a policy. So we're increasing who is also eligible for Citizens while at the same time saying we're trying to depopulate them.
So Citizens last month went before the state board for a rate increase. I believe got the approval to raise rates 13% on average for all the policyholders. Wow, that's a killer.
It is, and for consumers, when you know that that rate is going to continue to increase as a result of the glide path every single year, at least it's something they can prepare for, that they're going to be capped at a 14% rate increase. But you hear that, and when you multiply that out across the board, it's, you know, in my opinion, it's all in an effort to get citizens to this place of what we call actuarially sound, where their rates are more competitive with the private marketplace. But we're doing something and we're comparing apples to oranges. Citizens is not the private marketplace for a reason. They don't have to worry about paying taxes. They don't have to worry about paying executives at the end of a successful year. The commissions that they pay to agents is less than what a private market insurer pays. So when you try to get citizens' rates to a place that are going to be competitive with the private marketplace, you're doing unnecessary rate increases for consumers with a product that's apples to oranges.
So is it to get actuarially sound is the industry standard, but what that means practically speaking is if there's the big one that bankrupts citizens, every Florida homeowner, every person listening to us right now is on the hook. So that balance, instead of, you know, looking at can it be competitive, really isn't the standard, can it be solvent?
Well, but that's also the beauty of Citizens. The whole concept of Citizens is, as this carrier of last resort, that it's always going to be able to remain solvent because it's backed by the state of Florida, which is why our rates are lower, because we pay less in reinsurance than the private marketplace. So we just have this mindset that Citizens should be one thing, and it continuously shows us over and over again that it's going to be the major insurer in the state of Florida. And if we want to alleviate the risk that falls on the backs of consumers, we've got to figure out a different plan, because the reality is right now when a private marketplace insurer goes under, we also get that same assessment. We get it through FIGA. Everybody right now has a 1% assessment on their policy across the board because a private insurance company went insolvent.
Do you know what, I get a question that I can't answer, maybe you can, from so many people. Why, because we're a coastal state and because we're in the path of potential hurricanes, but so is Louisiana and so is Texas and so are the Carolinas, and why don't the residents of those states face the number of increases in their insurance and the decreasing coverage? Why do we have that problem in this state?
Well, if you look across the board countrywide, you'll see that insurance is a hot topic kind of everywhere. Obviously, 100%. In Florida, it's something that hits home, and we see our prices increasing, you know, much faster than everybody else. And I think it's the quality of insurers that we allow to come into the state of Florida. When you allow them to be undercapitalized and they rely heavily on a reinsurance program, that's 40 to 50% of what we're all paying in our premiums, because we rely so heavily on that reinsurance market that's overseas and unregulated, and we have no way to regulate what those costs are going to be. But we also can look to Texas for a model similar to what we proposed in this legislative session, which is a coastal wind-only policy program that's been extremely successful in Texas to help keep those rates down.
That's what we discussed when you were here with State Rep Spencer Roach. Is you going to bring that back, you think, this time?
Absolutely.
You think it'll go anywhere?
You know, listen, it's definitely one of the bills that got a lot of conversation as session ended. There's been a lot of conversation about needing to do something different. You know, we've passed all of these reforms. Citizens is continuing to increase in its policies. People's premiums are continuing to go up. We just had the threat of a Category 5 hurricane in June. The first one that we've really ever seen at that strength this early on. And it's not a matter of if, it's a matter of when, that we've got to make some big changes here in Florida.
Yeah. One last question on this bill before I let you go. The bill's pretty complicated and written as such. And I know there was a portion of the bill that mandated flood coverage for people who were in Citizens. And there's a national flood pool, which is much more affordable at the moment. But I honestly don't understand in the bill if that mandate is still there.
So really what the mandate did was actually really pro-consumer. So right now you've got this requirement that if you're in a flood zone, and you have Citizens, you have to have flood insurance. But it was also requiring you to have coverage not only on the cost of the dwelling of your house, but to also cover contents coverage. And that was increasing that premium cost. So what we did in this bill is we said, listen, you only have to have the dwelling coverage for purposes of qualifying for meeting that mandate. You don't have to cover contents under a flood insurance policy, in the hopes that that helps people lower that flood insurance premium.
What about people who don't really have a risk of flooding? If you live in a condo on a high floor, if you live on a big geographical ridge which runs through South Florida. Why do people need to pay for flood
So
insurance?
that was corrected. That was done during the big overhaul condo bill 2 years ago, and that provision was corrected in a separate bill other than the 1503. This one just specifically dealt with that delineation of you don't have to have that contents coverage anymore to meet that requirement.
State Rep Hillary Cassell, I love picking your insurance brain, and I know all of your colleagues, it's not a political thing, it is a Florida thing, and I so appreciate your insights and helping us understand all this.
My pleasure.
All right.